In this video, I want to look at, under the coronavirus stimulus packages, I want to look at the Paycheck Protection Program and the Economic Injury Disaster Loan. I've kind of put these two together because as a small business, you need to contact your bank or to the SBA. If you're the tax advisor, you need to be advising your client to consult with their local bank and or go online. There's so many different ways to get some kind of either reimbursement, forgiveness of debt. That I want to do first is that right here, if you're going to go to the Paycheck Protection Program, you would go to your local bank. If you want to go here to what we call the Economic Injury Disaster Loan, you're going to go online to the SBA. Now, just as a recap, this is money that if you meet the rules, you may not have to repay part or all of it. Again, this is to help you, the small business, to keep your employees employed. This benefit is for employers and employees. So what happens is, if I go to the PPP, I'm going to be able to get up to, in summary, 8 weeks from the date of the loan origination. I'm going to be able to spend this money on my employees, my rent, utilities, and qualified expenses, and then not have to repay the loan. Over here, under the Economic Injury Disaster Loan, there is inside that a $10,000 grant. And if you meet those requirements, then you do not have to repay that. I'm going to back up and go through that. That's the good stuff. But how do we qualify? And I will say, so importantly, that you're signing under perjury. You're signing under, this, we got to tell the truth, and you will. So if you're the employer, you can go online right now to the SBA. I've got clients, I talked to one this morning. He said he's got an SBA loan. SBA actually sent out a notice for him to go online, and he went online to qualify for the $10,000 grant. Now I'm assisting him in the PPP loan. The other thing I want to say in these two, both these, I'm going to call it the bank SBA. Now, in one of my other videos, I actually kind of draw a line here, and over here is what is benefits through the IRS. But this video is on how do I get a loan that I get debt forgiveness. And that's the focus here. This is to really help you and I, the small business, get through this coronavirus. I would think and pray to God that we're not here, because we'd all be in a better place. But we're in this place, and as a result, my focus today is going to be on the bank SBA side and how do I qualify for these funds now. For example, the SBA $10,000 grant, they say online, should be to your bank account within 3 days. Over on the PPP, your bank's going to have it in your account in a matter of days. I want to start to talk about how do we qualify? What do we have to do? So what's the eligibility? Well, the first thing is that you have to have less than 500 employees. You need to be a sole proprietor, an independent contractor, or self-employed. So we got fewer than 500 employees. We are a sole proprietor, independent contractor, or self-employed. Now I realize under the term sole proprietor and maybe over here on self-employed, I'm in an LLC partnership. I am self-employed. And then what we're looking at, what is this program all about? And that is, what it's trying to do is keep full-time, part-time, and some exceptions, I'm going to put other, which in this case could be paying the bills, paying the expenses, etc. We can take this money and spend it on full-time, part-time, and other expenses of our small business. And if we spend that correctly, then we don't have to repay that loan. That's the eligibility of you and I and our employees. When does this timeline start? So I'm going to name this 1. 2 is we had to be in operations before 2/15/20. And then finally, number 3, then what we are going to do, we're going to pay salaries, payroll, taxes, and other qualified expenses. Here again, to recap, what's the eligibility? Have to have under 500 employees, I got to be a sole proprietor, independent contractor, or self-employed. I'm going to take care of payroll, my full-time, my part-time, and then certain other operational expenses. I got to be in business before 2/15/20, and we're going to be able to spend this money in an 8-week period on salaries, payroll taxes, and other qualified expenses. So with that, what I'd like to do is go ahead and move to how much is this? What is that amount? But before we do, what I need to do is what I call the covered period, and that is 2/15/20 to 6/30/20. So that's what we call the covered period. That's the threshold for the loan. They're going to ask you questions about the year prior to February 15th, 20, and then we have to, in the covered period, spend this money in an 8-week period. What's my loan amount? I'm going to say this is the covered period. Secondly, what's the maximum, the loan amount? What's the loan dollars? Here's the general rule. It's 2.5 times the average monthly payroll. I'm going to put this in quotes, costs. And the reason why I put that in quotes is because when the law first came out a couple of days ago, I thought payroll costs like the IRS. But in this law, when I went through it, it said payroll costs and it had this definition like I would have thought doing a tax return. But it had this little addition on. It was a little, 1-AA is normal payroll. Then under it was a BB in the law a couple pages later. And what it did is payroll cost includes the self-employment earnings from you and I, the small business. So in doing this loan, my 2.5 times average monthly payroll cost, if I'm a practitioner, which I am, and you go to your practitioner, or if you're listening to this and you're a practitioner, you need to realize is payroll cost is very defined very differently. And the other thing I want to do right now is to say, probably out of several hours of research, I found this guide from the Chamber of Commerce, the United States Chamber of Commerce. I got to plug them. It's a very, very good thing to go to because it defines payroll costs. And it literally goes in it. It's like page 3 of a 4-page item. It defines it and it adds on that extra, the self-employed. So I recommend to you highly to go to that. Out of this, when I get done with this, I'm going to say go to your bank. Out of this, I'm going to say go to SBA. But what I'm looking at is I'm trying to kind of help you get through the minutia. Because in the end, this is to help business stay in business and employees to stay employed. And that's what we need right now. We all want to have a job. And as an employer, I want to make sure my employees are employed. So again, right here, and I really stress, I'm going to underline this actually in red. I think it's important. That's a game changer. Payroll costs under this act. I think it's actually on page 10, 11, and 12 of the act. But you need to look at the U.S. Chamber of Commerce guide. I believe it's on page 3 of a 4-page guide. And it will tell you payroll costs is not what us tax professionals, us payroll people think it is. For this loan application, it's a much broader definition. So now let's look back to what we're trying to do here. So I'm going to make this loan with the bank, or I maybe go direct to SBA under the injury disaster loan. But I'm going to get this money. And what happens is it's going to loan me up what they define, the bank and SBA defines as 2.5 times my monthly payroll cost. Now, there are certain exclusions. For example, I'm going to hit the biggest one. If you're a company and you are a employee or you're self-employed and your total earnings, including certain benefits, are in excess of $100,000, you're going to get capped out. So they're not going to let somebody making $500,000 to get that into the 2.5 of the average monthly earnings. So in this calculation, that's why I say I'm a practitioner, but when I'm working with banks and I find that these rules are changing, not the banks, but the definition. But one thing keeps standing. Nobody can get benefit from an employee or a self-employed person and multi-companies making over $100,000. So then what I want to look at now is the use of funds. I'm going to do an overview. You can get in the minutia, but I think the important thing is you've got the concept. So number one is payroll costs. And I'll put in quotes, because if you're a small business owner and you go to your practitioner, the bank in the end, and who's the policeman of this? Counting my experience and what I'm finding out doing consulting work is that the bank's going to be. But they, at the end of this 8-week period we're going to talk about in a minute, they're going to ask you for your expenses. And I'm going to have some recommendations on how to track that. But remember, it's payroll cost by the Paycheck Protection Program, not by income tax. Secondly, looking back here, is it's going to include some health insurance. Next, it's going to be things like interest. But again, guess what? It's got to be a loan that's prior to 2/15/20, because they don't want you to go out after the law came about and create these numbers. So you're going to see that covered period that I mentioned a couple of minutes ago starts February 15th. It's going to look at for rent. This is the use of the money. Then another one is going to be utilities. Okay. So these are the major areas of what we call the use of the money. What happens is we've got a 2/15/20. We've got a 6/30/20. We've got this line. And let's look how this happens. Whenever I started out and said, what is the maximum loan? It's the average of your payroll and your payroll cost. It's 2.5 of the payroll cost. Remember, that's a different definition. 2.5 times your monthly average payroll cost. So this is the loan. Now, you get the loan on whatever date. You get the loan after April 1st of 20. Actually, it's April 3rd for some people, April 10th for other people, but go to your banker for that. They'll help you. And then what happens is we have this 8-week period that we have to spend this money. Now, while I'm doing this, one thing I do want to say on the rent, it has to be an agreement that was into effect before 2/15/20. So I'm taking many pages of law, all kinds of articles, and trying to kind of simplify it. To kind of recap where we're up to now, we're going to go back and look at our actual expenses for a 12-month period prior to February 15th to 20th. We're going to come up with that payroll cost, and we're going to divide it by 12, because we're going to take annual divided by 12. That's our monthly. So what we're going to do is then we're going to take that monthly payroll cost, monthly, multiply it by 2.5, and that's going to be our loan. That's our loan. I'm kind of recapping it, but it's important. Then whenever we get the loan approved, whatever day this is, the origination date after 4/1, then we got an 8-week period from that origination date to pay bills, to pay payroll, to pay health insurance on our employees, to pay the interest on the mortgage, to pay the utilities, to pay the rent. When we get out here, wherever this 8 weeks, because it's based on the date of origination of the loan, then we're going to have to say to the bank, here is the documentation. You actually, in the loan papers you're signing, you're actually agreeing at the end of the 8 weeks, you're going to provide the bank with an accountability. Now, I'm recommending people work with your bank. If you're going to do this loan, maybe even set up a separate bank account and put this loan money in there. And then as you spend it out qualified. If not, you're still at the end of this period, wherever this is at. I'm drawing this little squiggly mark because it's 8 weeks from the it's the end of the 8 weeks of the origination. You're going to go back to the bank. You're going to go back here to the bank and say, here's how I spent the money. If you spend the money on this qualified expenses, so qualified expenses during this 8-week period, that is forgiven. So for example, if I go out here and I get a $20,000 Paycheck Protection Program loan, so that's $20,000, and it's based on, this is 2.5 months of my payroll cost, and I get it on April 3rd, 8 weeks later, I'm going to come back and say this $20,000 was spent on these qualified expenses. And if I only spent $18,000 from here, qualified expenses, then the bank's going to say that you now have a loan that you have to repay $2,000. So this is not dealing with, Washington. What they've tried to do is they've tried to put this down to where the process stays between you and the banker, you, the employer. Now, if you're the financial, tax, payroll advisor, what's going to happen is you need to work with this too. Because as I look at this, payroll cost has a different definition. It includes self-employment earnings. The use of the money has a specific definition, different than the IRS. This, again, we're talking about banking. The bank works with us on what our payroll cost is based on the past, prior 12 months to February 15th. We're going to get this loan. We got 8 weeks from the origination date to pay bills. But the point of it is, the reason why they're doing a look back, it's based on bills that you were paying before the coronavirus existed. It's to keep you and I in business, and it's to keep I get cold bumps, look at that. It's to keep our employees working. And I can tell you, it's so important. But it's not an all or none. Over this 8-week period, after we get the money, we're going to spend it and keep track of it. And at the end of the 8 weeks again, what we're going to do is we're going to go back to the back to the bank, because we've signed an agreement under perjury that we're going to account for the expenses, and then the bank is going to say, here's what's left. And I'll give you an example. It's normal operations. What I can't do, and I'll take rent. Over here looking down here under use of funds we started with, we talked about rent. Right here, rent. I can't go pay a year's rent. It's ordinary operational. This is for I pay the rent each month when it's due, and the rent I pay in this 8-week period is a qualified expense toward this $18,000. You know what? This is to help us all out in a crisis. I think this is helping this country to survive. I think it's helping you and I as employers to survive. I want my clients to survive, and I want their employees to survive. And you go, well, this is all, as I started this presentation out, this is all banking. Yes, it is. And as I said earlier, I have a client this morning, SBA loan, the SBA sound, you may qualify. I've talked to several banks. I have banks as clients. They're trying to call all their customers. I'm trying to help because, again, I called somebody this morning and I said, hey, this is available. What do I do? I said, well, I'm going to put together this presentation. I'm putting this together for all my clients. Last night, I was answering phone calls after midnight. There's only so many hours in the day. Counting as a summary, let's walk through this real quick. And also, while I think of it, I actually have a video on an overall summary on all the stimulus packages for the coronavirus. But to recap, in this area, there is the payroll, or I should say Paycheck Protection Program, the PPP. You go to start with your local bank. If they're not participating as a bank, they will refer you. I've had clients do it. They'll refer you to a bank that does. You will then give them the information, the look back for 12 months on the payroll cost. They will divide that by 12 for an annual to come up with a monthly, multiply it by 2.5. Those qualified expenses become your loan. You get that loan on day, let's say you apply for it and it starts on April 3rd. You've got 8 weeks. So the origination date is the key. So if you talk to a friend, their origination date might be April 3rd, it might be April 7th, etc. Their 8-week starts. What's going to happen is you're going to keep, as an employer, or in my case, I'm going to help my clients. I'm going to be helping them with those qualified expenses because they're expenses that I've already been incurring over the prior year. I'm going to pay my bills. If I spend more than that, my total debt's forgiven. As my example earlier, we got a loan for $20,000. We had qualified expenses in the 8-week period of 18. I now have a loan of $2,000 that I got to pay back. But you don't have to pay it back immediately. There's also, and the bank will explain it to you, and you can make this negotiation with your bank. You will have a period of time to pay that back. So with that, that's kind of a walkthrough. It's how you can stay open, take care of employees. The only thing I need to go back to is that I've kind of left this term over here alone. and that is the emergency injury disaster loan. And in it, I'm going to do a little erasing here. So let's come over here. The reason why it's a short stop, it's online with the SBA. Okay. You apply for the loan. My SBA clients have already been contacted. They have an SBA loan by SBA and tell them to go out. But it's available for all small business. What happens is when you make this loan, again, online with SBA, number one. Number two is the first $10,000 is a grant. When you apply for the loan, they're going to give you, they say in 3 days, the $10,000. Number four, even if you don't qualify, you get to keep this. So it's like, wow, there's this free loan. I don't have to repay it. But number five, it has to be spent on qualified expenses. Now, what does that mean? See, you got to spend it on qualified expenses, but if you've applied for the Payroll Protection Program loan, there may be situations where they're going to reduce this $10,000 grant. The point of it is you can't put my expenses in for both loans and use them twice. You only qualify the expense one time. So I think this is important when we're looking at the PPP loan, the Paycheck Protection Program. As I said earlier, this is the bank. This is SBA. But the bank loan actually ends up submitted to SBA, so they will sync these two together. So kind of in recapping and wrapping, looking at the banking side, I as a tax professional, I as a small business owner, looking at you out there as a small business owner or a tax professional, we need to be aware of these items in compliance. And in another video, I recommend you go to, I've actually looked at the various programs. I've looked at these two programs, which is banking, the PPP and the EIDL, but also we have we have a retention credit to retain our employees. We have a sick leave program. I've did videos on those. But also what I've done is I've done a short video on all of the stimulus options. And the big thing I want to say is that we have to know as a practitioner, we have to know as a small business employer, we have to know that I can't take a qualified expense and use it more than one time. We can qualify, but we can't use it more than one time. For example, I can't use an expense under the EIDB and also use it in my covered period as a reimbursement for my PPP, and then I can't use it for the credit. So again, and I've got a different video for that. I think this is important. This is compliance, and through this, I want people to comply because this is being fair to the system. And so what I'm going to lay here, it's a little slide, and it's what you're going to agree on the banking. You're going to agree that the loan is to support ongoing operations. That's number one. Number two, the loan will use to retain workers and pay business obligations. That's what I've said all through this presentation. Number four, no SBA 7A loan pending for the same purpose. And finally, nothing received under the Paycheck Protection Program, the PPP, in the period is for the same purpose. Again, you cannot double dip. So in summary, I hope this video helps you. Again, please go out and look at my coronavirus stimulus packages coordinating of the IRS side and the bank side, whether you're a small employer or whether you're a tax or payroll professional, because under all four things, under the retention credit, under the sick leave, under the PPP, under the EIDP, you have qualifying expenses, but I cannot double dip. So again, I hope this helps. This is the banking side of a small business tax professional life.